Alright, hello guys, and glad to have you on board again. Today, same old story, so let's jump right in. S&P 500 in flow trading mode is still very hard and complicated to navigate for multiple reasons. I'll try to be as brief as possible in explaining and trying to uncover all of this. Though, same old story, TLDR, there's still a hell a lot of noise in this market, which means the technical signals, specifically the ones in flow trading, are pretty damn complicated to work through. To be honest, I still can't figure out a definitive scenario. I still have two parallel viabilities, and I'm still waiting for the market to make its decision by invalidating one of them. Until then, both of them seems probable to me, and I'll try to explain what it means. All right, so without further ado, remember what we've had back then, so I'm not going to say it over again. We had a sequence of flow, very noisy fucking flow, and we've mentioned that back then that the technical signals were kind of blurry, and the fact that flow trading generally is kind of trending, which means the prices are going straight in one direction. But the thing is that we've seen this was kind of a hashed flow going up, down, down, up with lots of uncertainty. Signs back then that there were lots of volatility alerts as well. That tells us, well, cool down, folks. Don't try to be too much aggressive on this market. You'd rather like to have larger stop losses and assess for the market maker's volatility. All right? So that is what we know already. The things that we didn't know and that we've made assumptions back then were the complicated navigation of this particular area in which we said, I don't know if the flow is still going to keep on going or if it's already reversed with that third range boundary in here or eventually this one as a delayed third range boundary. Well, now we've had the answer because the market has pulled out the consolidative set of waves, and we know that there's going to be two of them. All right? Remember what we stated. The thing is that this could be one, this could be then the third range boundary terminating this first flow, and this would be, by breaking this third range boundary, the second flow, breaking the previous low point, and in that perspective, building another third range boundary right after, which is what we've done in here, would be signaling the end of the second flow. And we would have one flow, two flow, the second flow very, very quickly, triggered by the breakout of a third range boundary, and then we would have to build the final third range boundary, which would start to trigger the first flow to the upside. All right? Then, of course, we know the first flow will have to build itself a third range boundary, and therefore I will be willing to buy the moving average afterwards or the Bollinger Bands in order to sequence the second and then the third flow and so on. All right? So that is the pattern that I would say is confident enoughly following the rules of the strategy. All right? Now the thing is that, well, we can see that there's a lot of uncertainty regarding this part of the scenario, which is, did I really had a third range boundary in here, or is it just yet another noise sequence like we had back then? As you can see, back then we would have had a third range boundary and broken. Like we stated, when the third range boundary is squeezed, which means the market passes through this like it was nothing, and though I would say this is kind of potentially the case in here, the third range boundary has been dealt with pretty damn quickly. We've seen that this is because of catalysts, but still, the thing is that I can hardly say if there really has been a third range boundary in here or not. So we need to zoom in to this area to see what the technicals were at the time. All right? I'm going to go there, H1 time frame, and I'm going to have to look at, is it really a third range boundary that has been validated, confirmed, or stuff like that. Though you know the third range boundary's validation is reaching out the opposite trend channel. So this third range boundary has been validated. Has it been confirmed? Well, confirmation means closing above the 50% context, so not at all. In here, we kind of failed to confirm. We've gone to the level of confirmation. As you can see, we've traded the 50% context line, but we didn't really close above. So I would say this is a third range boundary that has been validated and broken before it actually turned out to be confirmed. And I would tend to say, well, that's a complicated story. The third range boundary that we've mentioned back then as a kind of a reference, this one is definitely a squeezed one. Remember that the squeezed third range boundary rules are pretty simple. The third range boundary, in order to be squeezed, need to go build a third range boundary and barely validating it. I mean, this one hasn't even been validated and it's been broken immediately. We also know that we have to trade above the higher time frame context, which means in here, on that front, back then, we're gonna have to push further the line to at least get to trade above the third range boundary, above the raising context. So the thing is that, well, as you can see, we barely managed to do it. Reason why back then I was still confident in the bull side. In here, same story. We fail. We go just inside the context. So all across the board, it's just going to be more and more complication to try figuring it out. So all I would say is just, when you can't figure it out, when the rules you have just can't separate and clear answer, well, all I would say is just don't try to force the market and just say, well, I don't know, though I'm going to keep myself open for both probabilities. If this is no more than a third range boundary that's been squeezed, then all of this is still the same first flow. We're still trading the first part of the consecutive flow, of the consolidated flow. And this, as once, is one big bear flow, which means this third range boundary is the one that separates both flows, first flow and the forthcoming second bear flow. Though in that sense, it would support the prices to go lower to break the previous low point, because flows have descending tops and descending bottoms. So we know that the bottom of the next flow is obviously going to be below 38.40. That's all we know. I don't know how far it's going to go. I don't know how long this second flow is going to last. All I know is that I first need to wait to get into this area below the previous low point, wait for the market to build its low point itself, reverse the context, build a third range boundary, and I would be damn ready to buy this one. All right, that's the case. Though option number one, this has been all along a single flow with a lot of noise and uncertainty in that area. And then this third range boundary is validated, confirmed all across the board. Then a second flow will follow. I'll wait for the second third range boundary to be bullish again. All right? And option number two, this has been a third range boundary very quickly validated and broken. And we've got the two sets of flows in here and in here. This is the second third range boundary. First one being there, second one being there. The second flow would have been very quick and aggressive, but still, remember that you don't know anything about timings in flow. Though this would just be nothing more than a very quick flow. It's been breaking the previous flow's low point, which means everything is confirmed in here. It just means, well, the second flow has been very quick. And you have, in that sense, to restore bullishness by bringing in a first bullish flow, which I would be able to buy the moving average or the Bollinger Band. Okay, so what matters is in both cases, I know what I'm going to do. I'm just going to let the market show me the direction. If this is really the set of two consecutive flows that is already over, we're going to have absolutely no problems to see this flow continuing until I get the 1 hour context trading at or above the moving average level, which means, give it a second to plot. All right, I want to see this context being continued to the upside to the point that the support context will cross above the moving average. When I got that, I will have the information that the first bullish flow is triggered, and then in that sense, I'm going to wait for a third range boundary and get ready to buy either the moving average or the Bollinger Band. All right, I hope you get that one. These are the rules that you should know. This is one trade that we're willing to be part of. Option number two, we go right back down, wait for the bullish third range boundary, which is a trade that I'll be willing to take as well. All right, though you know everything, I have tried as hard as possible to try figuring out which one of those scenarios is the likeliest, but to be honest, I don't have the answer. There's too much uncertainty regarding the potential validation of this one. It's too quick, it's been very volatile, and once again, I had all the assumptions explaining it. By just looking at the high time frame, we've got volatility alerts all across the board. That just tells me one thing. Well, exactly when I thought the market was going odd, and I can't figure out if the third range boundary has been validated or not, I got exactly at the same time a volatility alert. So it gives me the answer that I'm looking for. Instead of trying to force my way into the market by separating two scenarios, I have the exact answer. The market itself doesn't know where to go. It's volatile, it's crazy shit, though don't try to make it overcomplicated. Just get ready for both outcomes. Anyhow and anyway, there's one thing you should know. As long as you trade in the side and the direction of the low risk strategy, odds are not 50-50. All I know and all I'm confident about is to say, I'd rather like to be a bull than a bear in the current context. That doesn't mean I will succeed and the bears will fail. That just means odds are not 50-50. I have slightly better chances to succeed because the low risk strategies are bullish for now. All right? So that's really the way it is. In the short term, I think flows will emerge from today's FOMC meeting, but I can hardly say if there's going to be bullish or bearish flows. I'm just going to let the market make that decision for me. I am actually ready for both case scenarios. To be honest, like I said, I have always made it clear I have used back then the next expiration contracts just to make sure that if we ever have to go for a second bear flow, sure, this one can last long. Remember, you can't control the timing of these bear flows. All I know is that it's going to have to trade below that price. I don't know how long it's going to last, but I doubt it will be long enough to be until the next market expiration. Okay, so that's really the way it is. I am open for the largest set of possibilities. I am like soft enough in my risk limitation and risk management to allow for a lot of uncertainty because that's what the market is all about for now. These volatility alerts have a limited time span. They can't last forever. They generally last for 6 to 7 context boxes. Okay, so we've just got another one which is extending the volatility until early May. But like I said, I think anyhow and anyway, this current fucking market context in which we're in is certainly not the market context that I wish we have. I definitely would like the market to bring me the answers more clearly, but the thing is that the reality is that it isn't, and you'd rather like to embrace it instead of trying to fight it. All right? So get patient enough. Don't try to control the market. Just read it controllably, and you have all the information just telling you exactly what I think we're in, a volatile market that doesn't know where to go itself. So please, guys, don't try to think you're smarter than the market. All right? Just let it be. You're in the right side of the call normally. If you're trading bullish, that means you have slightly better chances to succeed. Certainly not guaranteeing it enough to make the bet of your life and to say, well, the market is going to surge, so I'm going to be a billionaire. I'm breaking everything with margin. No, it isn't. Okay? Get ready to take the stop loss if it has to be taken. Okay? That's really the way it is. Other markets, very interesting, where there are other flows. We know the WTI is trading in a very, very interesting long-term environment. We could say monthly ranges or eventually quarterly ranges. I personally still think these are monthly. So in that sense, you know, the low-risk strategies are going to be 3 time frames below. Okay, 1, 2, 3. So 4-hour chart time frame is where I will find bullish flows. Though we are in the long-term area where I think we can get the low-risk strategies to the upside, okay? Though the thing in here is that I need to study, okay? I got a couple of bear flows in here, which means I am very, very interested into finding the next bullish third range boundary. That doesn't mean this is going to be the next one that's going to succeed, okay? Just all I'm saying is that if I have enough of a bull flow, which means a sustained market going to the upside, enough for the reverse the context, flatten the moving average, and put the support context in line with the moving average. If I can get that, I will know that the first bullish flow on the 4-hour chart time frame has actually occurred, which means, well, I will wait for another fucking third range boundary and then buy the rising moving average or the Bollinger Band. Jesus, that's the same old story. So like I said, the rules are pretty simple. Just be dumb enough to apply them when you figure it out. The rule is simple. Just figure out where the fucking lower strategy is, go 3 steps below, and try to trade according to this. That's really the way it is. We're getting into the area in which normally WTI is supposed to find support, so that's the area in which the first flows are likely going to emerge. Don't be too speculative trying to buy now. Just say, let yourself go, look for the market. If it starts to trigger some upside flows, then that means you can enter these flows on the corrections that follow. All right? Until then, this is reversal trading that I'm doing now on the WTI. This is certainly not the same types of topics. So don't follow me on reversal trades. I'm trying to find the bottom, all right? which means when the first flow will trigger, I lock on some gains, and I will use those gains to follow the flow afterwards. These are more aggressive strategies that I take as an aggressive risk manager. But the thing is, you don't do that, all right? On your end, you've identified the low risk strategy, you know where the flow trading will occur, just wait for that flow to occur. If it does occur, I will certainly take more gains than you will, because I take more risks than you do. The thing is also that if for whatever reason I am wrong, and if WTI gets the break below 50, well, I will take a stop loss and you won't. So until then, be smart enough to understand that I don't know the future either. I'm just, of course, more aggressive because I have risk strategies and rules that explain why I'm buying it here. But they're certainly not flow trading, okay? You guys have to figure out the appropriate time frame to trade on, 4-hour chart, and wait for the market reaction. If I am right, this market reaction isn't going to wait too long, all right? So pay attention to this 4-hour chart. When we reverse this context, you will have the first sign that maybe something's happening, but you're going to have to wait longer until the first flow triggers, which means we want to see the support context crossing over the moving average. All right, until then, you just get patient. And if you want to make it easy on you guys, remember that I have actually created these indicators who does absolutely nothing magic. They do only things that you can do manually with manual indicators. Remember channels and pitchforks and stuff like that. So things you can draw yourself. But there's one thing that these indicators do is that they have and keep track of all the historical levels, and they plot it in a couple of seconds. So the thing is that you can use that to trigger alerts. If you know what you want to do, well, just put an alert on it, all right? You want to see the rising context crossing above the moving average? Well, you can do that, all right? You can say, I can take all the framework's outputs. So I would say crossing up, all right? And that would be basically, I want the support context, okay? The top area of the support context to cross over the rising moving average. And boy, that's going to be it. Very simple, right? All right, create, and I'm okay. And I would say, for example, WTI, 4-hour charts, confirmation of the first bullish flow, wait for a third range boundary, and buy the MA or the BBL. All right, that's really the way it is. That's how I fucking trade myself. I know what I wanted to do next. I'm going to set an alert just because I'm not crazy enough to remember all my scenarios at once. I write it down in an alert and let the alerts guide my way in. That's exactly the way it is. All right, now if we want to do the same, for example, on silver, because I had quite some questions surrounding silver, well, the same old story in here. I'm going to look for the low risk strategies. Boy, as you can see, we're definitely in a monthly context, but yeah, sounds like eventually quarterly would be the thing. Okay, so it's somewhere in between. I can definitely see that the quarterly market seems like a big fucking fat range like that, and we would be on the verge of accumulating to break out of it, which would be great, but that means the flow trading will be on the daily chart. So all I'm looking out in here is just, well, looking at the overall structure and trying to figure out once I got the flows. So give it a second to plot. Okay, I'm going to pause that one. All right, pretty weird this morning with trading view, but anyway, it's finally working. Though the thing is in here, as you can see, when you look for flow trading, just really make it easy on you guys. All you're looking for is the moments in which the moving average is trading below a rising context, or the opposite way around. So we could see that there would be eventually a first flow in here, second flow there. But somehow this is weird because we've got a lower low in here. But as you can see, this is pretty catalyzed. This has been COVID. So I would agree saying first flow has been in here. Second flow is there. If we assume that this never made the bottom, this was just kind of a weird moment of COVID. Otherwise, well, this is the first flow, and we're on the verge to get the second, all right? So that's really the way it is. Anyhow and anyway, there's the third range boundary in here. That's all we care about, okay? So third range boundary has been plotted, though we know that afterwards we get to buy either the moving average, but boy, I mean, just look at that. We were already trading on the moving average at that time. So buying the Bollinger Band was the plan. Though you buy all the positive signals on the moving average, one here, you get to buy that, all right? So that's the way it is. And you would be trading in here a potential second flow with a little bit of uncertainty on whether the one that you get in here is the second or third flow. So one thing you know for sure, you're always going to go for the lowest risk, which means if this is the third flow option, then you really want to take your profits on the forthcoming third range boundary, right? Okay, so that's really the way it is. Of course, you also know that anyhow and anyway, even if that's the second or third flow, it's not going to be activated until you break out of the previous market top. Okay, so this flow has to at least trade above $29. So you don't know how high it's going to go. You don't know how long it's going to settle, because once again, flow trading can last as long as it wants and can go as far as it wants. You have no control over these two parameters. All you know is that you're going to have to trade above 30 bucks. Okay, so that's at least trading above 30 bucks now for the next flow, and God knows how far it will go. All right, so you always have a bit of uncertainty, which means some rules can't be ruled in or out. In here, the rule that has a little bit of shaded gray area concern this bottom. Do you really do you really consider this one as being the lowest points? And you say, even if that was COVID, I am following the price action and the prices have traded there, so I can't rule it out. This is my first flow, though I still have two more to go. I would agree with that, because to me it is respecting the rules. On the other hand, if you're in the side of people who say, well, this clearly has been a first flow and I can see it, there's definitely have been a delayed third range boundary, and then the market has gone there, I should have bought this moving average. And the thing is that I probably did. Well, to be honest, I actually did. And the thing is that in that sense and in that front, you would say, well, this is just a very odd market sessions, which is due to quite an external catalyst, which was COVID back then, and you would say the market quickly recovered and triggered what definitely looks like a flow trade. Though I would agree, saying this was the first flow, this is just a market anomaly due to external factors, and then it goes all the way up, triggering the second flow. Anyhow and anyway, like we stated, there is still a bit of uncertainty. It's up to you, but what matters is that you take out the conclusion on what that leads us to for the future. For the future, it tells me the only uncertainty we have in here is on the flow count. Either this one is the number 2 flow or the number 3rd flow. In both cases, it's bullish anyway. All that tells you is that if it is the 3rd flow, it's going to be the last one, though don't forget to take your profits on the third range boundary. That's all it says, all right? Though that's really all that there is to know. If we have a quick look at Bitcoins and cryptocurrencies, same old story in here. We don't know where the flow trading is because the weekly chart seems to be very frequently volatile, very aggressive, like long range consolidation and massive explosions. Though we, of course, could explain that in a cyclical way of having halvings and stuff like that. But the thing is that if we zoom into the monthly chart, same story in here, it seems way too violent. So we know this is somewhere in between. The weekly chart seems too slow, the monthly chart seems too violent and reacting too laggy. So we would have flow tradings in between H1 and H4 time frames. That's the thing we've already mentioned before. All right? So both case scenarios, what's happening now is that if we're on in an H1 time frame, we would see a first flow in here, second flow in here with a broken third range boundary, or squeezed third range boundary in here, which means first flow, big and volatile second flow, absolute massive consolidation in here, like really massive. And then we get the final third flow. So that would be a sequence in here, and would be in a last terminal flow of the of this H1 reference time frame. So that means the next time we get a third range boundary in here, if this one holds on, you'd rather like to take your profits, all right? Still means Bitcoin has to trade right back down to 25K level right now, which is certainly not going to be a thing, I guess. Until further notice, we're in the third flow, it goes up, which means you don't know how long and how far it will go. You just have to let yourself ride that thing, okay? It's really the way it is. On the opposite hand, if we go for the 4-hour reference charts, then that means, oh boy, we've just started to trigger that trade, okay? As you can see, you would notice it's been rebouncing on the moving average. though I would say there's no third range boundary or any such a thing, so that would be just the first flow going on now. We would have to wait for a third range boundary, all right, and anyhow and anyway, it will likely buy the moving average afterwards. So this is the same old message. If we're in an H1 time frame, we might kind of be reaching the end rather than the beginning, so it's not an appropriate time to be extremely bullish on Bitcoin, but it's certainly stupid to try to be bearish, because the best you can get anyhow and anyway is a retracement, and the bulls will buy the crap out of this market if it reverses. So that's really the way it is. To me, I think that the safest bet is to be in between the two. Like the H1 time frame is really aggressive, but there's always going to be the safeguard of the H4 time frame. And as you can see, we've already traded quite bullish on the moving average. Though that tells me that, well, we didn't get quite the third range boundary to trade this moving average, but it feels like it is answering the same old question. We've seen that the monthly chart was pretty laggy and that the weekly chart is pretty aggressive. And it tells me that, well, we've seen the H1 flows were very aggressive and that the H4 pullback to the moving average seems to be very laggy. So it tells me the same old story. The appropriate time for Bitcoin is kind of in between H1 and H4. That means if you trade on H1 signals, get ready for some volatility, large stop losses, and reduced position sizing. But if you wait for the H4 timeframe to give you the perfect signals, you might wait for a long time. Though the true story to me is that, and that's exactly what I did back then, trade the H1 timeframe with larger stop loss and a lot more patience, and it's probably going to be the one that pays out. All right. So I've been among the traders for the second flow in here. I decided to take my profits in here back then, and I couldn't take this one. Though in that perspective, I am not margin trading Bitcoin at the moment, nor Ethereum. I'm still on Link. And that's pretty much all about it. So until further notice, that's the way it's going to be to me. The reaction has been pretty fucking solid on this moving average. And to be frank, I think we're already trading bullish, and there's even probabilities that this is the second H4 flow and that we just kind of couldn't build a third range boundary afterwards. Anyhow and anyway, if that's not the case, and if we get to build a third range boundary on the H4 time frame, you're going to be damn sure I'm going to heavily buy the rising moving average. All right? So that's the way it is for me. I think Bitcoin has no single chance to ever trade back into 20K levels. I think we're done with that level. I've always made it clear when we break 25K, there's so much volume to be settled in the 28 to 29K area. So I think we're just going to stay there for long. And like I said in here, the market is unpredictable. It's very noisy. And I will expect pretty much in the short term to see this volatility alerts emerge again. So just get ready for it. It's my sixth sense of trader telling me that in here the signals will be blurry as well, just like we said they are in the S&P and all other market classes. I expect Bitcoin to trade volatile in this 29-30K area. All right? So that will be the sign that all of your H1 signals will be noisy as fuck, and you rather like as well in here to be very, very cautious with your flow trading. Don't try to let your gains run on forever, and don't forget to take some profits. That's really the way it is, all right? But don't try to say, well, if it goes down for 10% or whatever, it's not nearly the end of it, all right? Could be some volatility, and to be honest, I expect it to happen. So until further notice, today's Powell day, so one more thing suggesting volatility is around the corner for Bitcoin. Until then, we've seen lots of uncertainty on the S&P 500 as well. The future will make the difference, but until then, it can be noisy in the short run, and it can last until May. So be patient, guy. These flow trades aren't easy. If anything was granted in the market, we would all be billionaires. And turns out, if I look around, it's not the case. So the thing is that it's going to take some time, and when the market doesn't bring clear answers, it's not up to you to force it in. All right? So take a step back, breathe in, breathe out, be smart, and understand that you cannot force your way in the market. When the market tells you right but the opposite, to just cool down, breathe in, breathe out, widen the stop loss, be more patient, and be more resilient. You rather like to do this rather than the opposite way around. That being said, bye guys.